Today was the day of the big roller coaster in the market. The S&P went up, the S&P went down, and it was just choppy all over. So let's go analyze the S&P 500 and the Nasdaq and see how it performed technically. So this is the S&P 500 at the 5-minute time frame. So if you looked at our videos yesterday, you might have noticed that we were talking about the big climb up in the charts from yesterday's daily time frame. And as you can see, the charts, it went up to a significant level and then it kind of like bounced around. It went all the way down to 4,200 levels and then again bounced back. So this was just a roller coaster day. If you are not a professional trader, it's extremely hard to trade such kind of markets because you'll kind of catch one gain and then you'll lose another gain. So it's extremely risky to ever trade these kind of choppy markets. Now let's look at the 4-hour time frame. So if you look at the 4-hour time frame, you would see so much of turbulence in this particular sector. So the market's just trying to decide, should it go up, should it go down, and it's just trying to form a good support and resistance levels in this time frame. So if this was me, this is what I would keep in mind. I would just keep track of 4296. That's the support that you see on this particular time frame, and on the top is 4406. So it's kind of like just hovering from the bottom to the top in this time frame. So if you're a short-term swing trader, you could probably try buying if you see it actually like hover from the lows again up, but it's extremely risky. I would avoid doing these kind of like volatile trading if you're a long-term trader. So my best advice to you is to stick to a higher time frame, but not too high because we still don't know if the market's going to go up or go down in the near time frame. So let's look at the daily and weekly to know more. Now, if you look at the daily time frame, this is the S&P 500 on the daily. You will notice that we did talk about this before, the 200-day moving average. That's the blue line that you see in your screen. And it has broken the 200-day moving line and it's starting to move down. So where is it going to fall, or how much lower is it going to go? Let's pay attention to the weekly time frame. Now, the weekly time frame, this is the S&P 500 on the weekly time frame, and this will give you a better picture of where the market's headed. So if you look at the current week, so you'll see that there is a strong 50-day moving average line on the 4316, so around the 4300. That's the reason why if you look at the 4-hour time frame, you'll see a lot of bouncing back around this level. See this is the 4316. You can see it's touching it so many times, and the reason why is that if you go to the weekly time frame, there is a lot of support here on the 50-day moving line, and you'll see this like in history. So if you look back here, this is again just another instance that I'm trying to pull up. You will see that it touched the 50-day moving line and then it bounced back. It touched the 50-day moving line and then it bounced back. So what I'm predicting here is that this 50-day moving line is very important. This will tell you if the market's going to break down all the way to the 200-day moving line, or is it just going to bounce back soon after. What I predict now is that the market has to close to the 50-day moving line. So let's see if the market actually breaks it and goes down. Friday is when we actually would complete one candle. So that's an important milestone to keep in mind. If the market kind of ends around the 50-day moving line, that's the area where it's taken support on and closed at. If the market moves lower and it closes on Friday at around this mark, that's a sign of danger. That means the market's going down. Now let's look at the Nasdaq and see how that's performed. Now the Nasdaq on the 5-minute time frame, very choppy, very volatile. You see a roller coaster of a drop here. It went down all the way to the 13,800 levels. So it's extremely risky to trade this short time frame. What I would do is to pay attention, look at the daily or the weekly time frame just to know more about the direction. So let's look at the daily time frame and see where that's headed. The daily time frame is extremely bad condition. So if you look at it, it's actually gone from all the way up from the 16,500 levels all the way down to the 13,000 levels. So it's a significant drop. Now, if you're a short seller, you would do extremely well and make a lot of chunk of change here in this big drop. Now, the 200-day moving line is something that I remember telling you about. Keep it in mind. Now, this has broken it, but this is the daily time frame, and it seems to be heading down in the lower direction. So a good way to analyze it now is to look at the weekly time frame, because the weekly time frame tells you where the long-term traders, and these are the traders that have a lot of money that they use to like buy and sell, but not just like 5 stocks or 10 stocks. They buy bulk of like 10,000 stocks. So that's something to keep in mind where the major trend is trending. So if you look at the weekly chart, this is a weekly Nasdaq. It has broken the 50-day moving line and it's heading lower. Now, something to keep in mind is the S&P is always greater than the Nasdaq. So if the S&P 500 is more respected than the Nasdaq in terms of technical analysis, so the S&P starts trending higher and respects the 50-day moving line on the, let me just show it to you so you understand it. So if the S&P 500 respects this line and then moves higher, the Nasdaq will follow suit, because a lot of the shares or a lot of the stocks that exist in the Nasdaq also exist in the S&P, but the S&P consists of 500 shares and it's more comprehensive. So with that, what I predict is for this coming week, the Nasdaq, the S&P would actually try to hover around, respect the 43.21 line. And if it does, that's a good sign. That means it's kind of holding support here. If it starts moving lower, I would keep my short sells ready and hold on and short sell till the market heads lower. So that's my prediction for now. Stay tuned for tomorrow to know more. But before we do that, let's look at the S&P sectors and see which perform well and which perform badly. So these are the S&P sectors for the day. Overall, the energy sector was leading compared to everything else that was red. So if you're a cautious investor, I would say avoid trading right now. Just kind of like stay on the sidelines. Don't risk too much money into the market. If you're a little aggressive, you could probably try something in the energy sector. So if you look at the energy sector, it has gone down the lowest in a week. If you look at the monthly sector average, it's performing the best. Now, when technology is 14% down, energy is 14% up. So that's a good sector to be in. And you could try investing lightly into the sector if you just want to put your money somewhere into the market.